and welcome. We are here again for this guest interview as part of the JM's e-magazine Horizon, and we've got a celebrity guest, somebody who I personally respect a lot, and somebody who's seen the evolution of private sector mutual fund in India. Incidentally, one of the earliest private sector mutual fund companies in India, and he, if I'm not mistaken, he's the employee number 1 at the AMC, Mr. Balasubramanian.
Not 1, 7.
Okay, number 7. Okay, so you're, let's see what if it's number 7. And he's one of the earliest employees of this AMC, and he's seen it from the very early days. He joined the AMC even before the SEBI mutual fund regulations were rolled out. And that's the kind of association with this industry and the evolution that he's seen. Mr. A. Balasubramanian, MD and CEO of Aditya Birla Sun Life Mutual Fund. Sir, welcome to this interview, and thank you so much for giving your time. If we observe the last few years, especially last 4 or 5 years, the retail participation seems to be really increasing, and a lot of investors are coming to mutual funds through SIPs.
Okay.
I would like to hear your views on this particular trend, but at the same time, I would also like to know how many of these SIPs continue for long periods and how many terminate earlier.
Yeah, interesting. First of all, thanks Amiji to be part of your discussion today. So my association also goes back with the JM, goes back the same period, and in which I have been part of the mutual industry.
Yeah.
So right from Namish Bhai and Vishal Company.
Yeah.
So since then my association has been there since the 90s. So happy to be part of their the session that they have on education and other engagement. I think the mutual industry has evolved quite a lot, in the sense now it has become an industry which people look up to it, and regulation have been enabling the industry to grow steadily, gradually at each year, and playing a larger role of channeling the pool of money to better use for creating wealth, as well as giving solution to the savers in the country. I think from a banking industry, how they play a role for the savers in the country, mutual funds have become the second largest vehicle to provide a similar solution with a better experience on the investment for wealth creation point of view.
Right.
And that is why I think today mutual fund industry is 50 lakh crore size is there. And Aditya Birla Sun mutual fund is 30 lakh, 20 lakh crore manage. I think that's an endorsement of the experience. But SIP is growing is actually good news. You also realize over a period of time, investing in the market is risky, market will remain volatile. At the same time, investing in the long term is a must. So SIP is actually is a proof of the last point, that you have to invest for long term if you have to create wealth. So SIP getting a higher recognition is something is something one should feel proud about it. And in my view, this will remain one of the growing pie of the mutual fund industry. This is not a product, this is a solution. SIP is a solution. And the very fact that people understood that solution based investing is the best thing that one investors can do, and SIP becoming prominent is something I feel it's a good trend. In the last 5 years, it's picked up quite a lot. Because people have realized that only way they can create a wealth for long term is put money in a small way every month through the SIP. That has become the trend. Second, also what has happened is people have realized that when I go for an investor education program, in a large pool of audience, we ask a question that how many of you sitting in the room have invested in mutual fund? Very few hands will rise. The moment you reverse the question, that how many of you invested in SIP? More hands will rise. Which again means that sometimes when you make investment, without realizing that you are making this investment through this vehicle, but investing for this purpose, this is for the goal. I think that's where I think best outcome will come.
Agreed.
So this is one thing which I see as far as SIP is concerned.
Agreed.
I think subscription redemptions is actually a functional thing. The way I see is every person who puts an SIP, he will sign up for perpetual when the market turns volatile, he may think that okay, I've done enough, therefore I'll withdraw. I need money for somewhere else. So that normally happens.
Right.
The ratio generally is about for every 100 applications, you'll find 30 applications getting expired or rejected. Then they also come back.
Right.
Though we don't have the right number for this, but every person who moves out also come back.
Also comes back.
So we don't actually negate these two things on basis which we say so much has come, so much has been withdrawn. I think the way I look at it is as long as the top line number, which is basically the SAP registration keep growing, which is the gross number, as long as the number keeps rising and rising and rising trend.
Yeah.
Even if there's a leaking bucket, if it is there, people will stop it for a variety of reasons.
Right.
And they also realize they're making mistakes, therefore they come back.
They come back.
So therefore they again come as a part of the registrations. So this is what I see. And markets, whenever it turns slow, okay, market also one has to remember that that market doesn't give linear return each year, higher return than the previous year.
Right.
There will be a year where the 1 year will become extremely bad.
Yeah.
Again for a variety of reasons. We do not know what will come and hit the market, sentiments, etc.
Of course.
But SAP is not meant for that. SAP is meant for long-term investing. Because we know the long-term market will look good. It will look like a linear curve. So if you join the dot, all your top charts will actually join.
Yeah.
If you put a straight line, it will join. But in that you will see the volatility.
Of course.
But as long as you are able to live through this volatility and then stay put on your investment for long term through the continuous investment in SAP, then the probability of making money and success to meet your requirement is high. Yeah.
Wonderful points. In fact, I really liked a couple of points that you mentioned. One is, instead of focusing on what vehicle one has chosen, if the focus is on the financial goal or one's own requirement, that's a better approach.
Correct.
Very well said. Number two is, sometimes people do stop in a lot of news really talk about the termination of SIPs, but I think the point is absolutely valid that that may happen, but so long as some of them keep coming back and so long as the the top line is growing, I think that's the focus one has to look at, because somebody may go out and come back and nobody is able to capture that number. So the percentage that comes out is often, the number that comes out is often deceptive and does not give the right picture. So while SIPs has been a major success story for the mutual fund industry, in the last 4 to 5 years, especially post the lockdowns that started on account of COVID-19, two other trends have also been seen. One is the opening up of demat accounts by new investors, and second is larger retail participation in derivatives. While SEBI, stock exchanges, various experts, they keep warning investors against derivatives, and the SEBI report, that famous report, said that more than 90% of derivative traders lose money. In spite of that, they keep coming. Now, direct stocks and derivatives, how would you look at that trend?
First and foremost, demat account getting opened up, it is the actual outcome of people recognizing investing in equity is for which you need to have demat account. Like having a bank account is a must.
Right.
If you want to transact in the banking side. The same way if you want to transact in the securities market, other than mutual fund, then you need to have a demat account. In the case of mutual fund, you need to have a folio. That's it, you need to have. You have to have a KFC customer, then you get a folio. That's why I think the onboarding happens as far as the capital market concerns. Once you come on board, of course every investors have got an instinct to buy and sell. So some people do on the basis of research, and most of the people who trade in the market, they trade on the basis of their own self-driven information that comes in, information they read, information they gather, and they look at the momentum in the market. Therefore, they always come and actually buy and sell. My way, there is nothing wrong in that, as long as one keeps limit on such kind of trading. So that you also have don't lose your money. Then everyone has to realize any money that we invest in the market is hard-earned money.
Agreed.
So we are not putting the money for losing money.
Agreed.
But losing money is a function of the market.
True.
It's a speculation is a function of the market. You lose money, sometimes you gain money. It's a zero-sum game at the end of the day. Somebody else is gain and somebody else is lost.
True.
But somebody will always lose money. We can't say nobody will lose money.
Agreed.
But the fact of the matter is one need to keep close check on this in terms of how much they can lose, and beyond that they have to stop it. So which is one advice I'll give. Second is as they start investing in the market, experience will go through tough times. When we think that experience will always be good, not necessarily. Experience could be bad. Even in direct investing, only one good thing is it's not in public domain. Therefore, you never go and tell somebody that I lost money. It will anyway boast about only their gains. They never talk about losses.
Agreed.
So that only known to him. So if you want to be true to himself or herself, then he must also realize that experience and start investing in mutual funds as well. Because this actually give you a cushion for your longer term investing. And whatever you dabble in the market on your own, that's something you have to just keep a close watch on this. Again, one has to also realize that that should not become a habit.
Right.
So I think what is the primary job of every individuals? The primary job is to deliver your duty for your salary that you get from your company.
Agreed.
So therefore, the best way to put your salary into better use, not by trading, not by speculating, by investing in mutual fund. I think that is what they have to realize. Therefore, somebody else takes care of your money, which is a mutual fund. Therefore, invest into the mutual fund for long-term investing point of view. And your money that you earn, that you anyway are supposed to earn, you have to grow in your life, you'll get promotions, you'll get salaries will increase. And that money also you have to protect for your longer-term goal point of view. So that if you choose mutual fund, and then instead of speculating, if you use the mutual fund, the probability of longer-term success is high. In the speculation, you will probably see short-term gain, not necessarily the short-term gain actually will remain as a gain forever. Because your works will always become your high priority. Your day-to-day work that you are doing, employment will become high priority.
Yes.
There is high probability that will miss some other things. And then this can lead to a tension. It can lead to a blood pressure going up. Stress. To avoid that, mutual fund can actually fill that through very well. But my view, losing money in the market is an experience. As long as you take an experience and then introspect and then do a course correction, then I would say it is not a bad thing to start with.
Wonderful, wonderful. So it's not bad by itself, so long as you learn the lessons and learn the right lessons more than anything else.
Correct.
So
for example, my son wants to invest. He is a 22-year-old boy. So I told him first you focus on studies, we'll see later. Right now is not the right time for you to invest. Some parents will say, no, I think I'll give you money, you'll try. But the thing is, what is permanent? I think for him, studying, progressing in his career, in his studies, and build his career, that is more priority, not investing in the market.
Right.
So I think that's what everyone has to realize.
Agreed. And there one of the points that some expert had highlighted long back is that when I invest as an individual, I don't calculate the NAV of my portfolio. So there is no performance tracking as far as I am concerned.
Correct.
Whereas if I invest through a mutual fund, transparently an NAV is published on a daily basis. So you can track the performance of mutual fund, you can track it against the benchmark. But as far as my performance goes, first of all, I have not decided a benchmark. Number two, I don't calculate I don't see the.
No, I think there is a fundamental disconnect in the way you see it. Mutual fund, they convert everything into return and see it. When you buy a stocks, you only look at the price to price.
Look at the price to price.
You look at the quantity, look at the price, and then look at the value. You don't go and calculate, I got 22%. Nobody says in equity, I got 20% return.
Agreed.
They only say, I got
so much money became so much.
That gain must be 5%.
Agreed.
But he's still happy with 1,000 rupees going to 1,020, he's happy.
Agreed.
It's only about 2% gain is getting it. But you only look at 1,000 going to 1,020.
Agreed.
But in the case of mutual fund, they convert this into a return and then see as how much return has come.
Percentage returns.
When you look at the return, somebody will always do better than you.
Right.
And then if you start thinking that you are doing better than worse than that, then it's also wrong assumptions. I always give the example, if somebody has bought a house in Parade in those days, they are more richer than somebody who has bought a house in, say, Panvel.
Right.
The very fact that you chose to buy in Panvel despite having money, you are satisfied, that's why you went to Panvel.
Exactly.
But not, and at that point I never thought I need to buy, I had money but I never thought about buying a house in Parade. Then why should refund? The refund doesn't arise. Therefore, even in the investment world, one has to derive satisfaction into what they get. And then automatically higher, better and better outcome will come.
but there is no adrenaline rush the way it comes in the stocks and the derivatives. So mutual fund that way becomes a slightly boring vehicle. But I think what you
boring is the best vehicle.
Is the best vehicle, absolutely. I think what you mentioned is amazing, that if I work on my profession, my job, my business, then the chances of making more money is far higher there, because I am putting my skills, my education and my time into it. Whereas in investing, I may have neither.
You got two power of compounding. When you focus on professions, you get your income keep rising. That money you put in mutual fund, this also kind of grows for you. Therefore, it has a double impact. Whereas if you less focus on your business and profession and focus more on the market, when the going is good, you are happy. When the going is bad, it can hurt you very badly.
It can hurt you very badly.
So market is can as it rewards people, it can equally punish. So and if you're not seeing the punishment, there is a high probability when it comes, you can't even fathom it.
Agreed. And because you paid less attention to the profession, your income is also lower from that side. So you're absolutely right. The compounding works in both ways. In fact, that was supposed to be my follow-up question. That for retail investors to tap capital markets, which is a better route, a mutual fund or directly stocks? And I think you beautifully articulated that there are advantages that a lot of people don't even talk about when it comes to mutual funds. It appears to be boring, but then anyway, a lot of things in life are not just about making fun.
So I think investment is serious business.
Yes.
So direct investing is usually a joy of seeing the price on a daily basis. And then you track it. The mind gets diverted there. Whereas mutual fund is boring, but it definitely makes you sit in the mutual fund portfolio for long term. Therefore, I would suggest if you not a professional person who understands market base which you are making investment, then better actually mutual fund is a better route. Even if you are a professional investors, you can still choose mutual fund.
Yes.
At least about 40 to 50 to 60% of the portfolio.
Yes.
Because in any investment world, you are silent investing and not looking at and with a clear long-term objective. That actually makes more money.
Right.
Than making a noise and making investment.
Too many ins and outs.
Ins and outs. Then there will be less money. And second, mutual fund is actually a better tracking mechanism that has got from an income tax point of view also.
Right.
So mutual fund is something you have to pay tax only at the time of redemptions.
Agreed.
And the moment it crosses 1 year, you get long-term capital tax at 10%. And you hold it as long as possible. Your gains are not taxed. You have been taxed only at the time of redemptions. You redeem up 10 years, I have to pay after 10 years. The way I think tax rates are going in India, there is a high probability that income tax rates will come down for individuals. Therefore, you end up paying a lower tax that would remain, say, in the next 10 years. Therefore, one has to understand these things also in making investment.
There is another brilliant point that if you are a professional, it may be okay for you to directly invest in stocks. But if you are not a professional, it's better to hire a professional who knows the job. And that's where mutual funds
and it's also cheap vehicle.
It's a cheap
vehicle. They say expenses is not significant in the overall return that has been generated.
Absolutely. A lot of times this is optical illusion, because I don't calculate the cost of my time that I have to invest to manage my money myself. And compared to that, the cost that I pay to a mutual fund for managing my money is more transparent and visible. So somebody says, oh, that much cost I have to pay. But this is the much bigger cost, because if I am a doctor, I might do a couple of surgeries during that time and make far more money out of those surgeries than I can make from stock markets. And that's the difference that a lot of people don't look at. So brilliantly put, the cost, professionalism, transparency, tracking mechanism, and I think you covered all the aspects. So as you mentioned in your introduction, I mean, it's been more than 3 decades in capital markets. So for you, large part of that is managing the mutual fund business. You've also been chairman MP for 2 terms. What are the insights that you gathered over these years about investor behavior and the acceptance of mutual funds?
So I think acceptance of mutual funds have been rising. been seeing a rising trend to accept mutual fund as a vehicle to invest. Second is people talk about mutual fund and help others to invest in mutual fund. There's also, in my view, it got evolved over a period of time. Thanks to one, financial literacy being undertaken by AMC.
Yes.
Second, people like you have been playing a larger role, and JM has been playing a larger role in increasing awareness. And investors who have been experiencing better outcome on their investments also go and tell people saying, I invest in mutual fund, you can also invest. Therefore, it helps each other types.
Right.
Which is what I think the mutual fund now becoming, gaining more and more recognition and importance. And this is something which I've seen. Third, which I'm saying is, I think the question of investing versus the question of redeeming. I think mostly the question that comes more of investing rather than redeeming, which essentially means again the language of the way you look at things also changing more towards investing rather than booking profit.
There are good insights on how the investor is looking at mutual funds. And finally, because you mentioned about financial literacy, I would specifically come to that particular point because when you were the MP chairman, that's when the mutual fund sahi campaign started. And at Aditya Birla Sun Life AMC, you've been doing some amazing work. And as we used to joke in the world of cricket during a particular era, that the World Cup, ODI World Cup is played to decide who will be number 2 team because Australia would anyway take the cup. It seems like you are winning all the awards and the others are fighting for second and third place. So kudos for that work and amazing work. So what are the major works to be done still in improving the financial literacy and increasing the mutual fund penetration is number one. And of course some things that you want to share about the work that your AMC and MC has done for financial education and literacy.
Sure. So first and foremost, I give credit to Mr. K.S. Rao, who is part of my senior management team, who has been driving this very passionately across the country, and he has been the one winning on the recognition. Though I had a vision to create a separate division for this.
And support. Your support and blessing that.
Yeah, both of course is there, but he has taken it a completely different level because of his only single point, passion. From the education point of view, I think mutual funds need to be moving away from product-based selling to a solution-based selling. I think the power of solution that can come from mutual fund is far higher, whether it is for retirement, whether it is for children education, whether it is for meeting a goal that every individual would have for long-term investing. That all these goals of individuals can be met purely out of mutual fund vehicles, which essentially comes to the solution approach.
Right.
Therefore, my suggestion, the next round of journey expectation would be that solution-based investment approach, how mutual fund can play a role, will become the next round of discussion. The moment that comes, the industry will go even more silently to provide a solution in the long term. Therefore, for channelizing the long-term money coming to the mutual fund. Second education that I think should also do is when people do make mistakes at times. Of course, the SIP you mentioned earlier question about the people withdraw, etc.
Yeah.
That I always say that we should never make the mistake. The SIP is not for tracking your performance. SIP is a simple financial saving tool.
Yes.
Return is the actual outcome that we get that's incidental.
Right.
I think if we get the return as an incidental, then the probability of getting higher success on an investment is far higher than looking at the return basis which making investment. I think people have to move away from once you choose right asset class, then return is not the main criteria. The return will come, automatically will come. Sometimes 1% lower, sometimes 1% higher. That doesn't mean it's bad. I think that's something my belief is one has to educate. From an Aditya Birla Sun Life mutual fund point of view, clearly our focus has been one, continue to drive mass education at the rural India.
Yeah.
Second is join hands with the schools and colleges to promote mutual fund literacy to the youngsters. And third is the better half of every household. The better half of every household, which is the housewife, the woman at every household play a larger role silently.
True.
They play a larger role silently.
True.
So that the larger role that they are playing, how they can also play a larger role in the wealth creation process of the family, rather than one person take the decision, whether the woman can also play a role. And that's something as a fund house we call it the for her education program, focusing only on women investors in the country.
Right.
That's something as a fund house we are doing. At the AMC level, we are looking at larger campaign at the school levels, how the literacy can go up at the school level. Therefore, they not only learn about investing in mutual fund for their longer term solution perspective, they can also influence their parents to understand more on mutual funds. So when the parents look at saving money for their kids, they'll also know mutual fund is a better vehicle for them to save, rather than going giving money into the unorganized money lender or taker, and then suddenly see your money disappear. Whereas the mutual fund, the power of compound will take that, give the benefit.
True.
Therefore, that is the one bigger initiative that the AMC level will be taking.
Super, super. Sir, really insightful conversation, and it is a pleasure as always talking to you. I think people have a lot to take away from this conversation. It's been a very rich and long experience of Bala sir. Amazing efforts in spreading the message, and as he rightly highlighted a couple of times, it's not about the investment vehicle, it's about the investment solutions. It's about the person's life and not so much about the markets. I think these are some very powerful lessons, and I think the efforts that you've been putting in for so many years, I believe the investor education initiative is also 10-year-old at the Birla Sun Life.
2012 we started.
2012 we started, so 11 years and almost 12 years now. And there also, I believe the effect of compounding will play a much bigger role, and more and more better results will be seen going forward. So once again, it was a pleasure, and thank you so much for your time, sir.
Thank you, Amitji. I think it was nice interacting with you.
Thanks.
And I hope it benefits everyone. It was nice interacting with Amit Trivedi as part of the JM Horizon video series interaction. I'm also happy to see moving away from a physical magazine to a video series in the form of Horizon video series to educate investors and increase the financial literacy in the country. This is something will go a long way in reaching out to millions of people in the country, in making them aware about investing in mutual funds and capital market, and impact that they can have, that they can get on their investment through this series. I wish Horizon video series and Amit Trivedi and JM for these wonderful initiatives, and I'm sure with the deep commitment, this will become one of the larger impact initiatives in the country.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.